Good morning, Paul Georgie from Allendale. It's October 23rd, Friday morning, and we've had a very quiet session in the grain markets overnight, and as we've had all week, the change from last week is very minimal, a penny, 2 cents in corn, soybeans, and wheat, so not a lot of action there. Trade still is worried about two factors, weather and demand. From the weather side of things, the FSU, Farmers Soviet Union, has had lighter rains than expected. That's providing a little bit of support to the wheat market here this morning. We've got Brazil still on tap to get more rain over the weekend and early next week. So that's going to have an influence here on Sunday night, Monday, as trade watches the amount of rain that especially Mato Grosso may get, the largest bean producing state in Brazil. So we're going to be watching that very closely come Monday, but right now looks like rain is on tap, and looks like we could get some rain here throughout the week in Brazil in the row crop production area. The Southern Plains getting some rain here last night. Tonight looks like we should see some rain move through the Midwest in areas that are mostly harvested already, and we still should have some pretty good harvest weather in areas that have got grain to harvest, like the northern corn belt. The demand side continues to struggle. Export sales yesterday showed corn sales 35% behind a year ago versus the USDA's estimate of 1% behind a year ago is what their whole year goal is. So we've got some catching up to do there. Soybeans 22% behind a year ago, wheat 17% behind a year ago. So the demand side of the equation for U.S. exports and exportable grain continues to struggle as the dollar continues to strengthen. We've seen the dollar index sharply higher yesterday. It's higher again this morning. That partially because of the EU statement that the European Central Bank, Mr. Draghi, said that they will likely do some quantitative easing in December, which would strengthen the dollar and its relationship, put pressure on U.S. exports. We also had China cut their reserves requirement last night by about 0.5%, and they also reduced their interest rate by 25 basis points. So they're attempting to get their economy going again and reversing the pattern of a slower economy there. We've got elections coming up in Argentina this weekend, the presidential election down there. Producers have just basically stopped selling grain, exportable grain, because the hope is that the new president will reduce the export sales tax. So we've got potentially more grain coming on the market, but in the near term, they've shut off the exports because of hopes of changing the taxing. We've also got option expiration for the November contracts at the Chicago Board of Trade in the grain market today. $9 strike in soybeans seems to be an area that trade is looking most closely at. That's the largest open interest that we have in any strike in the soybean, the November contract. Corn varies between 380, 370, 390, but looks like we're going to focus right around that 380 area in the December contract or the November options based off the December futures. In the livestock trade, we got cattle on feed report this afternoon. Trade's looking for 102% on feed, placed at 95.4, marketed at 97.5. The focus again is on placements, as the September feeding margins were extremely dismal, and expecting that a lot of producers and feedlots did not replace cattle during that September time frame. So looking for some lower placements there, but marketings fell also behind during that period of time, simply because of fighting that low price that we seen during September. In the futures side of things, December cattle have had a very sharp rally off these lows. Right now, it looks like the upper end of the resistance area is the 100-day moving average, which is a 146.46 that we've got to watch here today, which is higher than where the trade is right now, but seems like it's a target what trade is talking about achieving. On the hog side of things, technically there we're sitting right around that 20-day moving average. If we open below that today, we could hit some more stops. The next level of support in the December contract is $65 even. So watch those areas. If they're taken out, the uptrend is still intact, but that $65 area in the December contract is going to be key going home on Friday and see where this market closes. So if you got any questions, never hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a safe weekend, a good trading day, and we'll talk to you on Monday morning. Thank you.